All right, so let's begin. Hello, everyone. It's Sunday, February 9th. My name is Lee McMahon. You are in the weekend webinar. Thank you very much for joining me. Please take a moment to look over the risk disclaimer, which should now be on your screen. If you're watching the recording, please pause the recording and carry over the risk disclaimer, and then we will go to the charts. As always, if you have questions or requests, please, by all means, feel free to put them in the chat box. I will be happy to cover them for you. I will be covering most everything very quickly, so if you want a little bit more clarity on something or a different time frame, anything like that, by all means, just ask for it, and we'll be happy to do that for you. So, let's start. I actually haven't really got a chance to see if we have any major gaps. I'm going to run through that real quick. It doesn't really look like we do. Euro looks like it gapped down a little bit. Aussie gapped down a little bit. Aussie yen gapped up slightly, but has already pretty much filled it. So it looks like a fairly tame open. That's fine. That's great. Dollar yen up a little bit, but really, again, not overly significant. So going to start with let's start with the euro and go from there. All right, so this is let's go to the daily chart here on euro. A couple different ways to draw euro. So there's one way to draw it. All right, is you have the euro pretty well capped here still. This descending channel, descending wedge. Resistance coming up at about 136.50. Maybe we see it move back down towards this 134.30 level, the 200-day EMA. It'll bounce from there. The other way is you kind of cut through some of these wicks, all right, and we have a breakout. Kind of just depends on what's going to happen. Hard to say exactly right now what it is, but certainly a move above 136.50 would be a nice topside breakout with targets above 139. So that would be a nice clear trade. Until that point, play the resistance as resistance and see what happens. Pound dollar, all right, is definitely on my short radar this week. I know a lot of people aren't super keen on shorting the pound because it has been so strong lately. That's fine. I totally understand that. I think if he manages to see a trip up towards about 164.55, that is a very nice risk-reward trade to the downside on a retest of this broken wedge. There is some fib levels in that area too, right? This 50% is 164.59, so that's definitely an area of pretty high interest to me this week, on a pair of pretty high interest to me this week. All right, so I'll be keeping an eye out on that. Aussie is tricky. All right, we had a very weird candle on Friday. Let me clear some of these drawings. All right, just look at the candle for a minute. Very weird candle. All right, this is every time you see a candle like this after a little bit of an uptrend, you got to get a little nervous. All right, that is basically perfect classic doji, and we'll see. To me, it looks like right now the test for the Aussie is going to be this 50-period EMA, 50-day EMA. All right, you can see it was significant there. You can see that we crossed it here. The doji stayed above it, and now we're sitting above it. So I think if I don't have an Aussie dollar position right now. If I was long, I would be comfortable with my long so long as we stayed above this 50-day. Once we dip back below here, if we close below here, especially if we close below 89.20 or so today, that would make me nervous. All right, with this doji followed by a down red candle, I'd probably not be looking to hold longs. You do have to remember this is a fairly significant downtrend, so we'll see. There is, of course, the potential that we have right now for a sort of longer inverse head and shoulders type scenario. All right, need a right shoulder here around the 89 level, so that's something to keep an eye on. If that does become the case, I'll draw the neckline then, and we'll see. This is another one. All right, that could be a neckline that could explain this doji. So watch, the next, this week and the week after on Aussie. If it is trying to put in a fairly significant bottom, that would be one way for it to go. Kiwi. Kiwi looks like it's heading towards 83 for basically 83.76 or so. After this false breakout, break back in, very likely we'll see the top side of this range tested. We may see it break above 84. If we do, that would look good for longs. I mean, we'll have to see if we do get there. Certainly not a guarantee, but definitely something to keep an eye on. Dollar yen, all right, is also another one that's kind of in a tricky place right now. Cats by this 50, all right, which, you know, not insignificant of late, so we'll see. Still kind of held down here. Let's see if we can. All right, so that's sort of, I guess, a channel that you could be keeping an eye on. We have this level still fine. And then we have this area as well. So there's a couple different areas of resistance it's testing right now. We'll kind of have to see exactly how it plays out. But this general area here, right around 102.50 up towards about 102.85, pretty solid resistance area, definitely worth watching going forward. The reason that I'm not looking to really get super long dollar yen is that the Nikkei is about to hit some pretty solid resistance. All right, yeah. We had a pretty strong down move here from the 16,450 highs. All right, touched 14,000, bounced off there. Now we're coming up to retest the backside of this broken trend line. All right, this trend line dates back to June. It's been tested once, twice, 3 times, 4 times. Even if you go back here, you could even call it 5 times before it broke, and now we're retesting. So, I mean, this is a pretty solid resistance area for Nikkei. If we see the Nikkei fall, we're going to see yen pairs fall as well. So a little bit wary about trying to buy any yen pairs here. If I do see a convincing daily close on the Nikkei above 15,000, yeah, all right, I'll maybe start looking to hop back into some yen pair longs, yen shorts. One of those yen setups would be Aussie yen. All right, we broke back into this wedge after the false break. Same thing with Kiwi. You see this false break, you see it break back within. The odds are pretty decent. We're going to come up and test this 93 figure. If we break out of 93, that's pretty terrific. All right, and then we could see something like this. That'll be kind of a risk-dependent move, so that's just something we'll have to wait and see on. Kiwi yen, not really much of anything here. That 200-day held like a champ, and then kind of just rocketed up from there. I'll have to kind of see where it goes here. CAD yen. Okay, CAD yen's actually a pretty decent short. It was a great short up here at about 93.40 with 93.78 stops. Right now you need a 100 pip stop. A little bit big, but that's a pretty decent setup right there. Dollar CAD. All right, I actually do like dollar CAD to the downside here. I just am in disagreement with some traders that I respect a great deal, but I do like dollar CAD to have a little bit of downside here. I think we had this like little consolidation pattern, lots of wicks, lots of dojis. We had another, wick out on Friday with this spike down, but we still managed a pretty decent bearish close. And now we're testing resistance. You can see it on the 4-hour chart, kind of what I'm looking at. All right, I think we can see one more low here on dollar CAD, maybe push down to about 109.40 or so. Anyway, if you do like that setup, your stop is about 110.60, and the same thing, if we break back within, look for it to test and then continue higher. Fine, flip it if necessary. Other CAD pairs, pound CAD is, pretty decent consolidation right now. Play this as a breakout if you want, or play the range, whatever you want to do, but that's a nice consolidation to keep an eye on. EuroCAD is sloppy. All right, you can see the breakout, the breakdown, the break back up. It's kind of tough to play here. It's been more choppy and whippy than I would like it to be, so we'll have to kind of see how that plays out. Not a super huge fan of it right now. Swiss, for those of you that like it. Here's Swissy holding a trend line very nicely right now. Possible move. All right, this line is off slightly, but the same general idea. Move down towards the trend line, rally up towards the top of the trend line, which is about 92. Top of the channel, which is about 92.50. That's one to keep an eye on as well. While we're here, let's do gold. Gold trying to basically establishing a range between 1240 and 1280. It's choppy between there. If we do see a decisive move above 1280, that should open up some better upside. If we see a decisive move below 1240, that should open up some decisive downside. Don't have a great interest in trying to play it when it's stuck in that area. Silver is interesting here. I don't trade silver. I don't trade gold either. But even if I wanted to trade gold, I would never want to trade silver. All right, so silver kind of trying to mount a little bit of a breakout here. If it's leading gold, you can start to see gold accelerate a little bit higher. It's not been super convincing since it broke out, but still looks certainly pretty decent. Crude accelerated higher on Friday, pretty aggressively actually, back up over 100. So see it broke out. May continue to see additional upside here on crude. Watch 177 for resistance on that. Okay. Above there, it really starts to open up some pretty decent crude upside. Click out to the daily chart. Actually, let's see here. Never mind. Yeah, above 170 opens up some pretty decent upside on crude. If you trade that. Euro Aussie. Yeah, Euro Aussie held this 150 level. All right, you can see it's been significant here, and then it's significant back here, and then here, and then here. 154 is resistance. Below 150 opens up some additional downside. My ideal setup really on Euro Aussie right now would be to see it kind of tick up towards this 156 region, chop a little bit, and then break down. I think that could be a very strong move lower. I think it would be a fairly straightforward setup to trade. So that's my ideal. It's not necessarily what I think is going to happen. It's just what I think would be the easiest to trade. Euro Kiwi, well supported here about 163.50, well resisted here at 167.35. Pretty nice range to play here. If you want to play a range, this is not a terrible one to consider. Euro Pound. Okay, like Euro Pound to the upside. Go to the 4-hour chart. Okay, we're still below. We rejected nicely off of this 83.50 level, off of this descending trend line, and I think now we're going to try to consolidate a little bit here off of this 200 period, and then eventually push higher. You can see we started to get some moving average crossovers here. Could help finally start to propel price. But we do need to move over 83.50 to open up a pretty good size upside going forward. Pound Kiwi, trading in this giant wedge here. Okay. Support at 196.50. Resistance at about 204. That's about all you can really do. Really do is kind of play these ranges. So if we do see a brief dip here in Pound Kiwi, it might not be a terrible idea to hope the range holds for another 700 pip move higher before another 700 pip move lower. Pound Aussie, trendline support, moving average support at about 1.8. I may try to buy it if we dip down towards there. Other than that, I don't have a great interest in playing this pair. So, questions. Pairs that I missed. I think I got most of them. Yeah, I agree, Matt. So I write bi-weekly stock newsletter where I look at all the futures every time, and Dow looks fine. Like they looked grim, but they held. All right. This is E-minis. E-minis held this level, this major trend line very well. Like way higher on Friday. Fine. The Dow actually broke down Okay, below it's 200. Below this trend line goes back quite a ways on a weekly chart, but we broke back above, so that one's back to being okay. And then the Nasdaq again held a major trend line, accelerated higher. It's got some resistance coming up, but again, it looks fine. The only like index that scares me right now, in terms of it could go down a lot, is the Nikkei. And if that level holds, if this 16,450 move down to 1400 is an impulse sort of wave one, A wave type thing. I don't do Elliott wave a lot, but the idea I'm trying to convey is that if this is the first part of a move, and then what we've seen now between 14,000 and 15,000 is sort of a B wave, wave two, we could see again another aggressive selling coming in here on the Nikkei, which would send again yen pairs dropping pretty quickly. Yeah, I think, okay, so dollar yen was weird on Friday, obviously because of NFPs. You can see, I mean, when Nikkei moved down, the dollar yen followed it. It just hasn't followed the same extreme, and I do think that's because of E-minis holding and risk in general holding out a little bit better here on this side of the pond. You have to remember that almost all of that Nikkei damage was done in pre-market and after-market trading. All right, the futures trading is what killed the Nikkei. When you look at like the Nikkei session charts, it's just a flat line. They just straight across. All the damages they gap open 1,000 points lower and then don't do anything. So I think yen pairs play a little bit of catch up during the U.S. session or during that flatlining. And then drop during the futures trading. So I think that's what's going on, is that yen pairs haven't been able to accelerate as much to the downside because risk in the U.S. has held these past couple days. If we look at E-minis, it's actually, we've had 4 green days, albeit the first 2 barely, here in the last 4 in the U.S. And then Friday, obviously, we had some pretty terrific acceleration after a bad NFP. So I think that's what it is. I think that risk in general has been split between the two major, Asian and U.S. trading, and I think that has left yen pairs kind of stuck in the middle, and that eventually we'll see them resolve one way or another, just like we'll see the Nikkei E-mini divergence resolve as well, one way or another. The two can diverge for a while, but they will eventually. If the Nikkei does start to sell off really hard off that backside trend line, U.S. equities are going to follow it lower. It just may take a little bit. So, I don't trade this style, but if I was a hedge trader or split trader, what you could do is short the Nikkei and buy E-minis, with the assumption that, Nikkei looks worse right now. And they'll go in the same direction, so one of your trades are going to be losing, but you would assume that E-minis perform better to the upside and Nikkei performs better to the downside. That's not something that's not my style, but I think that might actually end up working out for February basically. All right, other questions or requests for pairs. Some of the other yen pairs, for what it's worth, euro yen testing some pretty solid resistance here, just shy of 140. Pound yen has a little bit to go still. 170 or so is its big resistance level. But euro yen, CAD yen look bearish. Aussie yen looks bullish. Kiwi yen looks confused. That's kind of the summary of yen pairs. All right, any other questions or requests? All right, I'm going to wrap it up. Thank you very much for joining me. As always, you can find me on Twitter at Duke0777 or at GlobalFxClub.com. Thanks for joining me. Good luck trading this week. I'll be uploading the recording as soon as it's done encoding. So look for that later tonight. And as always, if you have other questions or things that you think of, feel free to drop me a line on Twitter, and I'll be happy to talk to you there. So thank you very much for joining me. Enjoy what's left of your weekend if you have any left. Good luck trading this week, and I will talk to you soon.